And welcome to my YouTube channel. Hi, I'm Phil Grandy, philsgang.com. And please, during this presentation, make sure you hit for me, subscribe, like, and share. We'd really appreciate that. And also, anytime during this presentation, you can go sign up to become a gang member for 10 days free. Just go to where it says philsgang.com, get started, click on, and it says the Working Investor Group, and you'll be right at the right place. Okay, a lot to talk about today. Again, during this crisis, I'm going to do this every day to tell you exactly what I think the market's going to do, because I know you have that question. Okay, what's the market going to do? And if you keep listening to these fake business news networks like CNBC and Fox and Bloomberg, you go broke, especially with buying a dip. I'm going to prove that to you this morning. Remember Enron? How everybody lost money buying on the dip? Exactly what's going on now. Let's go back to Enron. You see this red line? This is the 200-day moving average. Now, anytime that you have the 200-day moving average and she's above, the stocks are above that 200-day moving average. The other stocks are above it, all above it. That's support. Okay, that means it's when you're above it, that means about 72% of your stocks are above this moving average. That's what you need. But what happens is when the market starts to crash and the stocks start running out of liquidity and everybody starts selling, then all of a sudden it switches where you got the 200-day moving average is above. That puts tremendous pressure on the stocks, tremendous pressure. And if you look here, every time, here, I'll turn this to white. You see it better? Every time they tell you to buy on the dip, this was during the 2008 crash. This was when Enron was in trouble. Every time they said buy on the dip, you were underneath the 200-day moving average. The same situation we have right here, right? And so they say, buy on a dip, buy on a dip. And they bought, and then it would drop. Buy on a dip. They'd buy, and it would collapse. Buy on a dip. And this was the big one. This is the one Kramer told everybody to buy on this dip. If you didn't buy on this dip, you got to be a fool. And look how it dropped. Ooh, all the way down. Because there's no support under your stock. You need the 200-day moving average under your stocks. Looking over here, if you have the 200-day moving average under your stock, you got total support. I mean, what a difference. Now, it's the same thing here. This was the 2018 crash, the last 3 months of 2018. And again, when it started to rally, we had the 200-day moving average underneath our stocks. That meant 72% of our stocks were above the support line. When we crashed in 2020, again, same thing. It was just the opposite. Just like over here, you had the 200-day moving average on top of your stocks. That's what happened right here, and that's what happened right here. This is 2018 crash. This is a 2020 crash. But then when they rallied them, like from here, all of a sudden they're rallying and the stocks were above the 200-day. Same thing here. Stocks were above the 200-day. And now look where we are now. We're in the same exact situation that we were in back here in 2008. And they're lying like hell telling you buy on the dips when you have the same exact problem right here that you had with Enron. See it right here? No different. And everybody's doing the same thing over again. They're buying on the dip. And then it drops. They buy on a dip, and it drops. Buy on a dip, it drops. They're buying this dip too. You can't buy and have a successful outcome when your moving average is above your stocks. It's got to be below the stocks to support them. Okay, so the market's going to continue to go down. All right, no question about it. We'll continue with all these rallies, like this rally and this rally and this rally and the rally we're in, but they're all going to come right back down until this changes. And what's got to change? You've got to get the 200-day moving average back underneath your stocks. That's not going to happen for a long time. You need what we call a key reversal, so your stocks would turn around. And I'll show you right here. So your stocks will turn around right here, and they start turning, and they go back up. Whoops, your stocks start going back up this way, okay, where they start turning, and then they're above, once again, getting support like this. See, that's what you need right there. You got just the opposite, see? So, again, if you got on your mind, what do you think the market's going to do? As long as that 200-day moving average, okay, is above your stocks, which it is right here, above your stock, just like it was here, the market's going to keep going down. Going to have our rallies, and that's why they love you to buy in the dip. Okay, see you on the charts.